I want to talk a little bit about my interest in gold. We've been having a bull market in gold for a couple of years now, and even in the last year alone, it's up from about $2,000 an ounce to $3,000. That's a huge move, and outpaces what was going on in most of last year, which was a still strong stock market. And I've been using that in our account, and you can see what the numbers are. They're not very successful. Why is that? Well, I think that we have a situation where, and this has happened often, when the price of gold moves up, the price of the miners that we own in our portfolio or can, mostly silver miners, doesn't go up as fast. And so a lot of that has happened in the last year. And so I think that the dynamics for gold, which I've talked about in the newsletter, which we've never seen before until the last few years, has been the attitude of the foreign central banks, particularly China and also Russia. And it's tied to, as I've said very often, the lack of confidence in the U.S. financial policy, such as sanctions against Russia. And as a result of that, you have a kind of a split between what investors do abroad, including the central banks, and what investors do in the United States. And the split is that people abroad are concerned about this. They're concerned about the sanctity of the dollar as a reserve currency, in part because of some of the actions like sanctions against Russia on the Ukraine war. And therefore, you've had a significant amount of steady central bank purchases. The situation in China is particularly dramatic because what the Chinese government has done has opened up to individual citizens in China the idea of actually owning and buying physical gold. And I've seen pictures of it almost looks like a little butterfly or something. I think it's a fraction of an ounce. And so this has caused a dramatic increase in buying of gold. And that has been the number one reason why gold has been moving up in the last few years. Meanwhile, Americans who 40 years ago, when gold had a strong move during all of the 1970s, why something like 5% of American investor assets were tied to gold. And now the number is down to less than 1%. So while you've had a situation where gold prices moved up for example, all of last year in 2024, that's been despite no net buying by American investors. And that, I think, explains part of why, for example, we have stocks that I've recommended over in the silver mining area, whether it's in Endeavor or Core Mining or more recently Avino Silver, have not participated to the same degree until the last month or two. And so I think it's kind of an interesting situation. And then more recently, you have evidence of panic on the part of, well, I guess the number one name is JP Morgan, that has been caught with an enormous short silver future position. And I'm sure it's tied with close links with the government, particularly the Federal Reserve. And a lot of people on Wall Street are thinking may start to impact silver prices in particular, which, although they've been strong along with gold, could be beginning to show a dramatic increase. So let's talk on another little interview on what's going on with silver.